Hey everybody, good morning. It's Jer. I want to talk a little bit right now. This goes with my stock market basics. Um, Before you are ever a bull, which is someone who believes a stock is going to do amazing and do crazy things and it's going to be great and we're going to make so much money, or being a bear, which believes the stock is crap and it's going to go down and yada yada, and it spikes so it must fall, yada yada. Um, be a realist. Um, so I hate this because it it's frustrating whenever you have to talk about a stock that you love going down, like about how it's trending downward and about its like resistance and it trying to find support, um, and because you come off as like not liking a stock that you might even still be in, which has happened, but that you are being realistic about. And yeah, so do not get into a place where you are paying attention to noise and drama more than you're paying attention to what's happening, what is actually happening, with stocks, whatever stocks you're looking at or watching, or in. Uh, be realistic, because if you are in comments on Webull or in stock twits and paying attention to what people are saying there, it's easy to get drawn into either way, like craziness for it to go up, craziness for it to go down, and to just like lose track of what the stock is and what it's doing, how it's trending, and paying attention to numbers and knowing the stock's kind of habits, because stocks have habits. If you look at a stock, you can kind of see how it trends, how it does things, how it goes up or down, when it goes up or down. And listening to noise or listening to drama is just distraction. Get into a stock because you believe in it, because you've done your own research, not because someone's screaming, we're going to squeeze this to 20. Or, if it's $1, $2, we're going to squeeze it to 20. The likelihood of that happening is very, very slim. But it's easy to get drawn into that hype and to think, okay, well, maybe this will happen. I'm going to stay in. And then next thing you know, because the stock is trending down, it doesn't go to that 20. And then you had this expectation of 20 and it just didn't happen. So be realistic, in any stock that you're looking at. Do your research. Look at the market cap, what the value of the company is based on the amount of float and the current stock price, and determine if, okay, this is undervalued or this is overvalued, and then stick to what you believe. But if you notice a trend going the other way, step back and reevaluate. It doesn't mean that you hate the stock because you're being realistic. It just means that you're being realistic with the stock, that you are looking at what and taking into account what could actually happen. You're doing risk analysis, which you should do. And if you're invested into a stock, if you believe that the stock is going to be long-term worth whatever price, and if nothing changes to make that negative, stay invested in it. Don't even go on stock twits. Don't even go on Weibo comments. Just leave it alone, because you're invested in it. You believe in it. You don't need to put up a fight for why you believe in it. Just be there. Leave it be. If you are a trader, or a swing trader, then you have to kind of pay attention to what's happening with the stock on the day to day and be realistic about what's happening. If you're in it for a short term and you notice that it's kind of trending down, maybe consider pulling out. If you've made a profit, you made a profit. That's amazing. Um, if you are a swing trader, determine if that's where you want your capital. If you want your capital in the stock that is trending down, if you think it's going to continue to trend down, or if it's trying to find its support, maybe pull some out and put your money elsewhere that it's going to make more quicker, which is, if you're a trader, that's what you want. You want to be able to make more quicker. Um, and you do the risk analysis on that one, whatever you're getting into. But before deciding and being don't ever be definitive bear or bull in any stock, because when you do that, you are setting this expectation that it's going to go up or it's going to go down, and you won't change your mind on it because you've let your emotions dictate where you're at. And you've let these people that are screaming, squeeze to 20 whenever it's a $1 stock, get to you. Like, don't have these crazy expectations. Set realistic expectations, and stay with that, because you will go along for the ride. It'll go up and down and sideways and whatever. So you should be prepared for that if you set your expectations on either being a bear or a bull in any stock, because things change. They change, especially on the stock market. They change day to day throughout the day. So I just wanted to say that because I think it's important, because I do talk to some people that think, oh, well, and this is another thing that's not very realistic. Oh, well, if I put $100 into this stock, am I going to be a millionaire next year? Probably not. Almost definitely not. If you could turn that $100 into, if you're investing, the likelihood of that $100 becoming much more, even doubling in a month, is not really great. But the great thing about being an investor is you can leave it and not have to worry about it. Just leave it and not have to worry about it. You're not going to get a great return from being an investor, but you get the benefit of not having to worry about it throughout every day. You can leave it and just go about your thing. It's not a job, it's an investment. And that's fine. And that's great for some people, because some people don't want to be trading. Some people don't want to be swing trading. Some people just want to invest and just leave it. And that is absolutely fine. But don't have unrealistic expectations that $100 you invest is going to become $1,000 within a month or whatever. It probably won't. And so, yeah, be realistic with what you're doing. And if you're trading, be realistic that you could lose everything. Like, if you don't know what you're doing, and anything can change just in like a heartbeat, and you could lose basically everything. You could really lose everything if you're in options. So be realistic. Understand what can happen. Do your risk analysis, and be prepared to, just because you turn from being full-on bull, like whatever, and you're being realistic, doesn't mean you're against the stock. Like, it doesn't mean you're against the stock that you loved before. It just means you're being realistic, and you should be realistic. Before you ever get into a stock, you should be realistic. Set your own price target. Don't listen to the noise and the drama, and do your research, and have a plan. If I listened to every time somebody said to the moon or rockets and got into a stock, then I'd be a lot poorer right now. I'd be a lot poorer right now. It would be bad. So just understand that a lot of people are there for their own personal gain, and they don't care what you do or how you do. And I want you to be realistic. I want you to go into things being realistic about what you're doing, and to have done your research and know what you're doing, and know what the stock does, what its habits are, how it's trending, and make educated decisions instead of listening to the moon and squeezing to $20 whenever the stock is $1.50 or whatever, because that's not realistic. It's not. And you should be, even if you're, and regardless if you're trading, investing, or swing trading or buying options. Be realistic in what you're doing. Okay, that's all I have. I love you all so much. I hope you have a profitable day, and I will see you very soon. Bye.